So South East Melbourne is one of Victoria's biggest growth corridors.
Yeah, so today we're talking about top markets within that particular area, long-term trends that we've identified, and forecasts that we think to look out for in the next sort of 10 years. It grew by 476% over the past 10 years.
It's massive. That southeast area has some huge growth. It really has.
But if you're investing in those markets, you've just wasted your money.
The region is expected to grow from 870,000 people to 1.3 million residents in that time, and some of the areas is Clyde North, Officer, Pakenham. So it has that whole area is quite obvious. It's in a lot of news, podcasts, everything at the moment. That southeast area has some huge growth. It really has. There's some names in here that we're probably going to murder, like we did on the last one. So apologies to anyone that wants to listen to us mispronounce your local suburbs.
Yeah, don't worry about that. You know what we're talking about.
Yeah, so we'll get straight into it. So population growth. So one of the first things that you look at is the estimated growth. So and some of the numbers we have here are based on the estimated population growth in 2046. So essentially 20 years from now.
Yeah.
The region is expected to grow from 870,000 people to 1.3 million residents in that time, and some of the areas is Clyde North, Officer, Pakenham, Cranbourne, and Springvale.
Yeah, so I mean, a lot of people would be familiar with these markets. They have been growing over the past sort of 5-10 years, more so recently, but 870,000 to 1.3 million residents over that period. It's a pretty significant increase.
Yeah.
So really good supply coming in, or really good amount of demand coming in, I should say. Property is going to be similar, but I still think there's going to be an imbalance there. But the growth drivers, that Clyde North and Officer, it's really concentrated market for where the population is moving to, because that's where a lot of the houses are being developed.
Yeah.
So
the some of the biggest drivers, as you said, is larger families.
Yep.
You know, as your families grow, you do need to move further out a lot of the time, because if, you need the 5-bedder, you need a backyard, pool, whatever you need for your family. A lot of migrants migrating into those areas, retirees as well, because it's an easy downsize. Yeah. You might have had your apartment or something closer into the city. You can downsize, wipe your mortgage out, start again fresh somewhere else. Yeah. And obviously it's not too far of a commute. I don't know the exact time frames.
Yeah.
But,
well, I mean, and again, it depends on, commute to the city. It's not necessarily everyone working to the city. Do you want lifestyle factors because you're close to the Morning Peninsula? Is it just going to the beach, or is it down into, sort of that St Kilda sort of, the more coastal suburbs? So, lifestyle factors are still really accessible. Yeah. But one of the biggest, projects that is stimulating this market is the rail loop. So, there is that accessibility there that they know there's going to be more demand because of those markets for, accessibility to other neighbouring suburbs. So they are rolling that infrastructure out. In terms of top growth suburbs, so like we said, these markets have been built out over the last 5-10 years, which is reflective in the growth. So Officer South, it grew by 476% over the past 10 years.
It's massive.
But that is land registration to now houses selling. So it's not, there's obviously people have purchased the land. Say if they've purchased the land for 300,000, they've spent a couple of $100,000 building a house.
It's not a true reflection.
It's not a true reflection of growth.
Because you've added the capital.
Exactly.
Yeah.
So Clyde North, Officer and Clyde, they're more reflective of growth in those markets. And they're pretty good performers, but they are in line with a lot of other markets we've spoken about. Even in the Central Coast, the one that we did last week. So key drivers behind those, Greenfield estates, obviously, affordability and infrastructure rolling out, which is all in line with, that demand profile that we're seeing for that southeast corridor, families, migrants, retirees and commuters.
So on the flip side of that, obviously a lot of people entering the market less than 800K, perfect for first home buyers. Mm-hmm. So some of those markets that are still doing really well, I don't know why I stitched myself up taking this part, but Dove, Is it Doveton?
It is Doveton, Clyde, Cranbourne, Pakenham again, and Hampton Park. You want to try the Cooey Rup, Brad?
Cooey Rup. What a great name. I'd live there just for the name, to be honest.
But they are all affordable markets, and they're under that $800,000 typical price.
Yeah.
Which is really important for that first home buyer profile, because I believe, and you'll know more about that scheme than I, but I believe the Melbourne market for the new first home guarantee scheme is sub 900,000 to be eligible for the 5%.
So yeah,
deposit.
it's changed a lot.
Yeah.
I know in New South Wales, Sydney, and some of the region, it's gone up to 1.5 mil.
Yeah.
I think Victoria, from memory, it's still around that 900K.
Yeah. So it is only the more affordable markets that are going to be influenced by that.
So
by that
you
policy.
get worst performing suburbs.
Mm-hmm.
So name and shame here. So Malvern East at 14%, Oakleigh East at 21%, Clayton at 31%, and Caulfield East at 32%.
Yeah.
So main reason for that is probably a high amount of growth prior to the 10 years, maybe an overinflated. It's part of the cycle, essentially. So they might have had a really big peak just before that 10-year mark, and everything's sort of been a little bit flat since then.
Absolutely. And, I mean, 14%, that's – I mean, you might as well just be going backwards, because with the amount of inflation that we've had over that 10 years, you've just spent money on being in a house. So it's sort of – I mean, you know, we do know the benefits of owning a property to live in yourself, but if you're investing in those markets, you've just wasted your money.
Yeah, you've gone very much sideways. So on that prestige, over 1.5 mil, you got Glen Waverley.
Yep.
So the average there is 1.97. Mount Waverley is 1.84. Monash LGA at 1.71. And Ashwood at 1.59 mil.
Yeah, and you know, prestige buyers, education focused, and looking for that lifestyle, the lifestyle factors in property as well, which is typically what we see for that prestige market.
So some of the other things that you look at when you're obviously wanting to invest is some of the public housing concentrations, and the highest is Ashwood at 13%.
Yeah,
Hampton East at 12%, and Doveton at 8%, and Dandenong at 6%.
Yeah, so they are the top 4 suburbs for public housing concentrations in that sort of SA4 location of the South East Melbourne corridor. But it is really important, and it's not necessarily reflective of growth. It's just to be aware of that if you're buying in, say, Ashwood with the highest concentration, be really specific about the pocket that you buy in that suburb. Because if you're buying adjacent, you know, there's obviously going to be increased crime and safety factors that come with it. So if it's an investment, tenants are going to factor that in when they're going to rent your property.
Might have higher
turnover of tenants, but also you're not really going to sell to a family in the future, because they're also always going to look at that sort of stuff. So they are really important things to consider.
So next is rental yields. So areas with the highest rental yields is Greenfields.
Yep.
And that's 3.5 to 4.5%, which is good.
Yeah, I mean, most of those, it is really affordability to that prestige market. The top end of the market's sort of trading around 2%, which is, you know, pretty standard across the board for that higher end
Which
market.
was on the flip side, which was the Monash and Mount Waverley, which is around that 2%.
Yeah. So, I mean, for 3 to 4% yields for a sub $800,000 market, it's not spectacular.
Yeah.
Because, you know, New South Wales, we're still seeing yields for, you know, 4 to 5% for properties between 1 and 1.2 million. So, I would like to. I did look at the vacancy rates for some of these markets. Some of them are extremely low, below 1%, but some of them get up around the 7% vacancies. So, when you've got yields sort of not too great, and you've got increased vacancy rates, I think we do need to start seeing that population growth there to try and minimise that risk there.
So next up is some infrastructure, which also, again, is something that you want to look at when you're selecting an area. So one of the biggest, which opened this year, was actually the Metro Tunnel, which basically puts more trains to the outer suburbs, connects easier into the CBD.
Suburban rail loop.
Yep.
Which is Clayton Monash.
Yep.
That's going to be the biggest thing. But again, this isn't I believe it's not forecast to be operational until 2030 or post 2030.
2035.
Yeah. So
Yeah.
there is, I mean, and there's almost an opportunity there, but you need to be timing it really well with when's the highest year of population influx, when's going to be sort of limited supply of dwellings being built, and how does that then reflect with that future infrastructure? So timing is important for these markets, I think.
Yeah, so then you look at what's going to happen over the next 15 years, 20 years, and again, it's the Suburban rail loop.
Yep.
Estimated to open in 2035. That's going to be pretty big.
Yeah.
You know, again, trying to, forecast these things, and because those areas where these stations are going to open will become more appealing to a lot of people.
But they'll also, I mean, there's also going to be increased zoning and increased density. So there will be markets likely with a lot of townhouses and units in them as well. So I think that's an important thing to note for people to keep an eye out for.
So that's pretty much it for today.
That's basically it.
Jump on the comments. If you've got any other areas you want us to focus on, throw it in the comments and we'll be happy to do an episode for you.
See you on the next one.
Thank you.